Welcome to the Janus Friday Market Insights for the week ending February the 5th. I am Grant Conroy, Portfolio Manager and Partner, and with me today is Wayne Rochelle, who is Founding Partner, CIO and CEO. Welcome, Wayne.
Good to be here.
So, jumping right in, what happened this week in the markets?
Well, what a difference a week makes. It was a negative week last week. This week was positive. Risk on this week. This week was buoyed by good economic news. Earnings numbers coming out were great. 80% of the reporting so far has beat estimates. It's been a very strong beat from that perspective. And GameStop came back to reality, down 80% for the week. And so that contagion kind of went away, and that's helped give the market a boost as well. But during the week, markets are up strong, up almost 4%. Yields rose again. And VIX dropped dramatically. And so the winners were in the financial and energy space. So more of the recovery trade doing better this week.
That's great. And I saw a thing this morning, I think at the time of recording this, we're still positive at the moment, but this will be the first 5 positive days in the US markets, at least, I think, since last August, if we can hold on. So good week. Just countering that a little bit, the jobs numbers came out this morning in Canada and the US, and Canada saw the largest decline in employment since April on renewed sort of lockdown. Yet the GDP expectations are still 4 to 5% here for 2021. Do you think those are too high?
Not at all. Not at all. We're getting hit right now. Consumer confidence is being hit by the shutdowns and lockdowns, and the curve is starting to flatten now, which is good news. More vaccines are coming out. We're going to get more. There may even be an oversupply come mid-year, for all we know, by sounds of it. Canada is a bit behind the curve, though, versus the U.S. and other countries. I think we'll catch up later on. But I think the stimulus is just so massive, Grant. It's both from a government and central bank perspective. My concern actually is that maybe there's too much stimulus coming down the pike, that it might actually cause some inflationary problems later on. When the numbers in the U.S. broke this morning, they're weaker than expected as well, and bond yields rose. I think because they're expecting a bigger, more stimulus, and I think there could be some concerns about inflation longer term. So I think that we're on track for a recovery. It's going to happen. The vaccines are here. The money's been spent. It will recover. The market always looks 6 to 9 months in advance. It's coming. We will get a recovery. The concern now is maybe they're going to overdo it. Politicians always act too late, as we know, and the market's looking way into the future.
So just on that, does the way that the GDP is made up make a difference? If there's more stimulus, obviously, and consumer growth comes back and other things bounce, it could be overdone. But if it's just government stimulus, is that not such good GDP as if it was sort of more natural and private economy?
Yeah, no, it's not. It's basically the government is spending money and levitating the economy. When they pull that back, when that gets pulled back, the producers will have to carry the freight rather than the government, and that's what we have to do longer term. Somebody has to pay for the government longer term, and it's got to be the producers.
2020 saw a big focus between growth stocks and value stocks. Obviously, as the pandemic accelerated the market's focus on growth names and technology. Can you explain how that's changed so far through 2021?
It's value has done better than growth. In the first month of January, value was up around 3-4%. Growth was down marginally. Anytime you see the recovery trade is going to help value stocks. Bond yields going up, a steeper yield curve helps value stocks, and so we think we're going to see more of that. There's going to be still big tech is still going to technology is going to do well. Big tech not so well this year, I think. But technology will still do well because of the massive move toward digitization of the overall economy. But we expect by the end of the year, value will still be leading the train as economic growth comes in stronger and we have higher interest rates. So reflation trade definitely helps value stocks.
And January ended the month negative, and there's an old adage out there that states as goes January, so does the rest of the year. Do you have any comments on that?
Well, it was negative just barely. It had a good open, and it collapsed the last week on the GameStop craziness. And so I call it flat, I guess. But maybe we're going to have that kind of a year. Lots of volatility through the course of the month. Maybe we'll have that through the course of this year. I think the story this year, there really is more the stocks you pick. I think you got to focus on picking the reflation trade, less, versus the growth trade and the pandemic trade. It's picking the right stocks will help you win this year. I think there's room for stock picking to add value this year.
Great. And finally, Super Bowl weekend, Super Bowl 55 this weekend. As a predictor, apparently it's been right 75% of the time. If an AFC team wins, which would be Kansas, the market is down for the year. And if an NFC team wins, which would be Tampa, the market goes up for the year. So do you have any thoughts on Super Bowl this weekend?
Well, I love Tom Brady. He's the GOAT. He's the greatest of all time. And I hope they win. He's a sentimental favorite. And that would help the market go up this year if that rule keeps on winning. But the Kansas City Chiefs and Mahomes is an amazing quarterback, and I just can't see the Kansas City defense Tampa defense stopping Kansas City. So I hate to say it, but I think Kansas City is going to win. Don't hold me to that bet, but we'll somehow get through. Hopefully, with the other 25% this year where it's wrong. But
well, I think correlation isn't really a cause either. So sometimes these numbers just are a bit more fun than actual meaning. Well, thank you for that. And if anyone has questions, feel free to reach out to your portfolio managers, and have a great weekend. Goodbye.